So in this video today, we're going to go over how the pay structure for energy management consultants actually works in Ontario Green Savings. If you head over to your binder, which is available on the university, and you scroll down, I think to page 20, I believe, yeah, page 18, you will have access to this page called Energy Consulting Team Compensation Plan. Now, it's important for you to understand that compensation plan is actually based on what's called a gross margin commission. A gross margin commission is actually a plan that's designed to share a percentage of the gross margins with the sales representative. So this simply means that the consultants earn a percentage of the profit, not the revenue. This means that you will receive a percentage of the revenue minus the expenses of the install. This is an industry standard pay system where the companies are selling actual products and tangible units that have to be installed and not just a service. For example, if you sell a product for $50 a month times 120 months adds up to about $6,000. And if it costs us about $3,000 to complete that and deliver that installation, then you will receive a percentage of the remaining $3,000, not a percentage of the $6,000. This structure is actually called a gross margin commission structure. Now, to just summarize the pay structure quickly, here we have given you guys 3 or 4 tips that's very useful for you. Consultants are paid on gross margins. There will be extras calculated in the final commissions. Consultants should never downsell. Consultants should always upsell when permitted. Now, in addition to that, there are some additional bonuses you could get qualified for as well. Some of them are your weekly bonuses. Then we also cover the first $200 of every basic extras that go on the jobs. Now, the basic extras are actually just your kilometers, extra materials, and any other additional work that needs to be done. It does not cover any incentives or rebates that you offer to the customers. The remainder of the extras typically get a split 50%, 50-50 between the energy management consultants as well as their TLs and AOMs. Now, at any point, if you actually get 7 equipment installed with a minimum of 475 RMRs, then we waive off all the basic extra charges for you. In addition to that, you also have your basic weekly bonuses as well, which is a tiered based bonus that allows you to earn up to $1,200 a week just in bonuses alone. Now, I'm going to head over to an example of a payroll and kind of explain quickly how the payrolls, how to read your pay report basically once you receive it. I'm just going to zoom out a little bit so I can see the entire screen. Okay, perfect. So it usually once you receive your first commission paycheck, you're going to receive a report with it that looks like this. It's printed out and it comes with your check at the same time. Obviously, in this report, you will have the office you're operating out of. So out of any 3 or 4 or 5 offices, you'll have the office address. Then you'll have your name, your position, your agent ID number, as well as your leader's name. The reason why we add the leader's name is that because if you have any questions, you have to go up to your leader first, and you will have the leader communicate with the office. Now here, in these 2 rows, you will have the pay period starting time, pay period ending time, and the actual pay date itself. So you typically get paid 2 weeks behind the time that the sale is actually done and the installation is completed. That's just a regular structure. It's about 2 weeks behind. Your pay is actually 2 weeks behind the installation date. Now, then you will have 2 separate sections here called personal revenue and team revenue. So personal revenue is the sales that you actually complete yourself, the installs you get yourself. You'll have the information about the sale. So you'll have your agent name, the job ID number, the customer job status, sales type, financial status, whether or not the deal is funded, sales status, whether or not it's ready for payroll. Obviously, in order for you to get paid, it has to be ready for payroll. The installation date, you'll have the product, what equipment was installed, the monthly rate, your commission, if there was any overrides. Obviously, you're not earning any overrides on your own sales, and the overrides are actually earned on your team members. If there was any extra charges, which we just discussed previously, a portion of that would fall back on you, and you would see it under this column, installation extra charges. If you have promised anything in addition to the regular sale to the customer, for example, if you promised them a $200 rebate or a $50 cashback or some sort of an incentive, or if you promised them a free thermostat, then that amount of the cost of the free thermostat or the cost of the free product or the rebate would reflect in this section of your pay report. And then you'll have the total receivable, total, basically the net for that specific job. Therefore, here you understand that if you look at it, it's your commission minus the extra charges that gives you the total. So this is the revenue. This is the cost. So revenue minus cost gives you your gross commission. In the second section, you'll have the team revenue. In the team revenue, you will have the agents that are operating under your branch. You'll have their names and all the sales and the jobs that they're actually getting paid for, with all the information the same as your own personal production, personal revenue. You'll have all the information all the way to the monthly rates. Then you will receive your overrides based on whatever multiple you are, which is tied into the position that you're in. So if you're a TL, AOM, or an OM, you'll have different multiples. If there's any extra charges, additional promises, and this is the net receivable for you. Now we're going to scroll down a little bit here. You'll see all the pending and canceled accounts that you had actually sold during that time, the same pay period. You will just have access to the information here. And at the bottom, you'll have four different tables. So we call it one. This is the second one. It's a third table and a fourth table here. Now we'll start with the fourth one. This is your adjustment, and if there is any details regarding that adjustment, you'll have it here. So if there's any reimbursement, if there's any overrides, if there's any bonuses, marketing adjustments, if there's any rent adjustments, road trip chargebacks, and other adjustments. So you will have all the information with respect to your pay here. If there's any advances you've taken out from the company, if there's any loans that you have to pay back to us, you will have the amount of the advance here. Then you will have what's being deducted on this payroll and what's remaining. Here in table number 2, you'll have the business expenses associated with you earning the revenue that you did on this pay period. So one of them is your marketing cost. So you'll have the marketing representative's name. You'll have what the description of what this charge is, which is marketing rep base pay, and what the amount is. This is something that's already predetermined by your team leader or your office manager. So we just go based off of what they have provided to the company. So you'll have the amounts here. And this one is basically your business income summary. So this is all the information that you need to have with respect to your pay report. So this is a summary of it. You'll have access to your personal revenue, which is, if you add these two together, you'll have access to your personal revenue. Now, another thing to point out is that when you have a red line here, that means this job was installed, but it's not ready to be paid out, or it has been removed. So here you see a red line, meaning that this job is not ready to be paid out yet because it is not funded. And here you can see that the commission is 0, therefore the total is 0, but we give you the job information so you're aware of that. Here you have your personal revenue, team revenue, which is basically, if you add up all the totals here, it gives you the team revenue of $874.88. You have a ratio analysis here that explains to you what percentage of your paycheck is coming from your own personal work and what percentage of your paycheck is coming from your team's revenue. Basically, as soon as you reach the level of being a team leader or an AOM or an OM, what you want to focus on is to start increasing your team revenue over time. So this ratio starts changing a little bit, meaning that you put in less sales yourself, but your team continues to increase, bringing in more sales, and that's called leveraging your knowledge. But you don't want to do that until you get to a OM position or anything above that. Until you're in an OM position, you're still required to bring in 500 RMRs every single week yourself. If there's any weekly bonuses that you get qualified for, you'll have the amount here. Marketing expenses is basically, if you add up these numbers here under your marketing cost and business expenses, this gives you your marketing expense, which is the addition of those three numbers. If there was any advances that are being deducted, you would have the information here and the number shows up here. If there are any adjustments, you would have the info here and the adjustment appears here. Now you'll have your subtotal income, which is the addition of all these numbers together, which adds up on this check to be $1,024.42. And then you'll have your HST here. If you have provided us with your HST number, this will get added at a later time, and then this will be the total check. Once the check is printed out, over here in this cell, we put in the check number. So 8,542 will be the check number we'll input on this pay report, and then we'll print it out, we'll ship it out to your office, and you'll receive it. So this is basically the breakdown of how your pay report actually works.